The S&P 500 snapped its 8-day winning streak last Thursday, and the PSEI also had a 6-day winning streak. What usually happens after a win streak like this? Let's discuss. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. So the Philippine markets got a boost last week when the GDP numbers came in at 5.9%, in stark contrast to the disappointing 4.3% last month. This blew analysts' expectations of 4.7 to 4.9. Now, the 2.1 percentage points of the 5.9%, or 36% of GDP growth, was mainly driven by the dramatic increase in government spending last July and August. So this puts the Philippines at the top spot for the third quarter among our Asian neighbors, though Japan and Thailand have yet to report their numbers. So with this result, we are targeting 6.7% for the whole of 2023. With this target, we need to achieve a 7.2% growth rate, especially for the traditionally strong fourth quarter, just to hit the lower band of our target, which is 6%. The concern going forward here is the reduced consumption due to inflation and high interest rates. Are we looking at increased government spending in the next months, only so that we can hit our GDP growth rate targets? The markets also got some good news earlier last week when inflation numbers dropped to 4.9 from 6.1 last September. Food and non-alcoholic beverages still make up the majority of our inflation print, coming in at 2.1% of the 4.9%. So the significant drop in rice prices help improve our inflation numbers. So with the 4.9 inflation print, our year-to-date inflation is now down to 6.4%. With 2023 target of around 5.6%, we will need to further improve inflation numbers in Q4, which may prove challenging, especially during the holiday season. Now, onto the PSEI charts. The PH markets did a catch-up last week after the long holiday, rallying to a high of 6,200 before pulling back to 6,160. Typically, with a win streak like this one, although a red candle, we still consider this as an up day. Typically, we should encounter pullbacks to give buyers another opportunity to come in. However, if we look at previous win streaks here, 1, 2, 3, 4, 5, 6, we can see significant pullbacks every time this happens. So you see, we have another one here last November. Here, 1, 2, 3, 4, 5, 6. So we had a pullback here, and we had another one here at 1, 2, 3, 4, 5, 6, 7 here, and then a very big correction after that. Hopefully, with the positive inflation in GDP numbers, we can count on pullbacks to encounter bull demand this time around. So for the PSEI, I would like to see a retracement either to 6134 or 6090, and hope for a bounce at these levels so that we can establish a higher low, and then hopefully we can also break through this trend line resistance and make another go at 6,250. Now, looking at some individual stocks, congratulations to those who were able to receive their dividends for SCC and DMC. So we are entering into the third week after the X date, and has SCC and DMC bottomed out yet? We do not know, but their next dividend X date would be sometime in April. So look for some key levels for SCC and DMC if you want to buy back. Now note that for next year, they may not give the same yield moving forward, but nevertheless, we can still expect somewhere around 10% plus dividend yield for both SCC and DMC, which is still actually pretty good. Next, we have JFC with a strong rebound at our critical zones here at 212 and 208. This pullback here could be a good opportunity to go in, but please do some risk management. Set a stop loss here at 202.8 or 203, but the upside potential here, either at 236 or 249, could present a good 1:2 or 1:3 risk reward ratio. URC could also be a good trade if it breaks out of 113.5, no? But the upside here would probably be less than Jollibee, as we may still see rallies encounter sell demand when it encounters resistances at 119 and 126 to 129. Now, as we reach halfway towards November, let's talk about some strategies and the possible scenarios for 2024 and how this plays into our possible stock picks moving forward. So let's look at the current situation and compare it with last year. So last year, we were entering into a situation where we were pretty sure about what was going to happen in 2023. Inflation was high during that time. We knew that interest rates were going to go up because we had inflation at around 8%, 9%. We also knew that there's pent-up demand and the economy was going to reopen. We also knew that China was due for a reopening play. Knowing these things with a high degree of certainty, we were able to strategize accordingly. Now, let's look at the situation today. Interest rates back in 2023 were projected to go up. Now, they are up. Now, we are in a situation where interest rates are already high. So, we are coming into 2024 with interest rates at 6.5%. Now, what is supposed to happen when interest rates are high? No, we will see higher cost of borrowing. We will see less demand for loans, loans for cars, loans for mortgages. We will see small businesses having impact on their costs because their interest payments are going to increase. But we will still see banks continue to enjoy high net interest margins. But with high interest rates, we will see less liquidity in the economy, as you'll get a lot of offers, time deposit, bonds at 6.5, at 7% yields. So you put what, a couple of million here, a couple of million there. And it still presents a better alternative than just putting your money in a bank where it's not earning interest. So has these things happened yet? No. The latest earnings from all of the companies still show spectacular growth across the board, from properties, banks, GT Cap. We're still seeing spectacular growth. So what is happening here is that we do not know when the effects of higher interest rates will kick in next year. So it's hard to speculate on when we will start seeing the effects of high interest rates on businesses. So, I mean, which businesses are going to be affected with high interest rates? We all know it's properties, right? GT Cap, cars, etc. Consumer demands, malls, right? So, we haven't seen that yet. Now, are rates going to go up next year? We don't know. And that's the thing. Rates will go up in line with whatever inflation results we will get in the next few months, whatever economic numbers we will get in the next few months. So it's hard to strategize for 2024 with this kind of uncertainty. And what do markets hate the most? It's uncertainty, which is the reason why the PSEI is performing the way it is. It's actually down year to date. And if you look at the S&P 500 also, there's only 7 stocks that's keeping the S&P 500 up. We don't know if interest rates are going to stay at 6.5% and if it's going to go up or if it's going to go down even. I don't even think that interest rates will go down in 2024. I believe it's going to stay at 6.5 for the whole year. If that is the case, we will be looking at an economic slowdown. Which companies will be affected, right? So we want to stay defensive in an economic slowdown. So you have the likes of SEC, DMC, and Aboitiz Power. I mean, if you're going to cut costs, you're not going to turn off the lights or turn off the electric fan. You're going to need electricity. So Meralco, Manila Water would be good defensive plays. cheaper alternatives to things that we usually splurge on. JFC, URC, Monde, right? Companies with a lot of cash that are not affected by high interest rates. So look for those companies. No? Which companies will suffer? Retail, properties, small businesses. So as of now, we need more data. I mean, even the BSP doesn't know what's going to happen next year. So at this point, we still need more data to determine what's in store for us in 2024. Let's go on to the global markets. No, we didn't get a lot of economic numbers last week, but Fed Chairman Jay Powell's speech was enough to spoil the S&P 500 win streak after he switched to a hawkish tone indicating more rate hikes to come. He's basically saying, you know, guys, one quarter of good or bad numbers doesn't mean we're done. This is to remind everyone that 2% is still the inflation target and rates will stay higher for longer is still in play. Now, so the S&P 500 encountered significant resistance here at 4,400 zone, but just like that, the market forgot about it the next day, and look at that rally. Could we be getting another win streak this week? Ideally, we should see the markets pull back to these levels, especially at 4,300, for this rally to remain healthy. Now, looking at past win streak, things are actually looking good for the markets over the next 2 months, but this slight pullback here should be in line with our typical November reads. And if we look at our November charts, we usually encounter a pullback into the third week options expirations, especially before we rally towards December. If we look at the options expirations for November 17, for this week, we can see a call wall here at 440 and maximum pain at 430. So this is a massive options week with almost 3 million in options expiring. So we could possibly consolidate along this area right where we think this is going to retrace to 4,300. Looking at the charts, this might look like a bearish engulfing candle, which might suggest further upside this week. But zooming into the 2-hour charts, we can see here a structure at the 4,350 zones. If we do get a pullback here and this goes below 4,350, then it would be great to see the markets go down to 4,300 or 4,280 and bounce off from that level. So hopefully we can see a bit more upside in the markets, and as we approach the holiday season, let's all pray for a Santa Claus rally. So looking at next week's economic calendar, we will have critical inflation numbers, which are going to be key on how the markets could swing depending on the reads. The forecast is for inflation to cool down to 4%. If we get reads higher than that, we can expect the markets to react to the downside. Back home, the BSP will convene for the Monetary Board meeting, which will determine the direction of the BSP going into Q4. Currently, interest rates are at 6.5%, and hopefully we've seen the peak of interest rates at 6.5%. But in the meantime, I hope everybody's doing well. If you found the information on this video useful, please like this video, subscribe to the channel for more updates, and again, good luck with your trades. Please manage your risk accordingly, and I'll see you again next week. Bye-bye.